to ciasta, pierniki, mogę się.
It's 6 o'clock in London, it's 1 p.m. in New York, 1 a.m. in Hong Kong, 3 a.m. in Sydney, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young. The IPO-VID live stream, Series 13, comes to a conclusion today. Episode 6, that's episode number 78 in total, starts here. Another interesting cooperation deal this past week. The New York Stock Exchange are getting together with the Tokyo Stock Exchange, looking to improve listings and all manner of other wonderful things around the stock market universe. That follows on, of course, from the similar deal that NYSE did with the Singapore Exchange, SGX, during July. Great move from the NYSE president and indeed former IPO-VID guest, Lynn Martin. Meanwhile, we all saw that the EU being skeptical about European energy benchmarks was quite the thing during the course of the last week, once the energy markets managed to get themselves into a terrible kerfuffle without any Russian gas. What got a lot less publicity was the rollback by the European Commission, as reported in the Financial Times by the good offices of Philip Stafford et al. Seems, gosh, now there's a shock to all IPO-VID viewers, ladies and gentlemen. Free open markets actually work rather well, as do the long painstakingly built benchmarks around them like TTF. Lack of supply, however, causes prices to go up. Finally, this week, a few congratulations are in order. Delighted to see amongst the IPO-VID alumni, we earlier mentioned Lynn Martin, of course, the president of the New York Stock Exchange. Gordon Bennett from Intercontinental Exchange, he was named Environmental Finance's Sustainable Business Leader of the Year. We can readily attest to that, of course, because Gordon was a fabulous guest in IPO-VID 051, where he was discussing ICE being on the road to a global carbon price with our special guest presenter, Steve Zwick, and myself. Congratulations too to Air Carbon Exchange for winning for the second consecutive year Environmental Finance's Best Carbon Exchange. Outstanding work from IPO-VID alumni from episodes 50 and 64, William Pazos and Thomas McMahon. Our guest today, ladies and gentlemen, is Kevin Brady. Kevin Brady is bringing us to a show which we have titled A2X, A Market for All. Kevin is a co-founder and CEO of A2X, as opposed to CEX of A2O, which I was about to say. CEO of A2X Market, a license-regulated stock exchange created along with Sean Melnick and Ashley Mendelowitz in 2014 to bring healthy competition to the South African equity market and break the 130-year-long JSE, that's the Johannesburg Stock Exchange, monopoly. A2X started trading in October 2017 and now has no less than 69 instruments, no giggling at the back, listed with a combined market cap, and there's certainly no giggling here, over 5 trillion South African rand, which is $300 billion in the rampant US currency. Raised in, well, good grief, a cornucopia of the Commonwealth, South Africa, Australia, and the UK. Kevin has over 25 years of financial markets experience, including 12 years at Investec, of which 9 were as head of Investec Institutional Securities and Prime Broking Division. Kevin, welcome to IPO-VID. Where in the world are you today?
Well, thank you, Patrick, and wonderful to be on the show. I'm in Johannesburg, South Africa. It's a lovely spring evening. It's about 25 degrees at the moment. An interesting fact about Joburg is we tend to go from winter to summer in 2 weeks, and then spring only arrives a bit later, like November, when the rains start.
It's a beautiful climate altogether, and of course, indeed, as you say, you're in an inverted climate compared to Europe, where we're currently working our way into autumn, along with the delights of some helicopters going overhead. I see, at least it's not the drug squad raiding the next door neighbours for once, as they're already in jail. Good. Look, tell me a little bit about yourself, Kevin. So you had this very interesting cornucopia of upbringing across the Commonwealth. Were you born in South Africa?
So yes, I was born in South Africa. My father was an expat and worked for an international pharmaceutical company, Bristol Myers Squibb. And as a result of that, we moved around the world. So yes, till about 8 in South Africa. Then I spent 5 years in Sydney. Then we moved across to the UK. We settled there. My father moved on to Brussels. And so, yes, it has been a varied upbringing, but very fortunate, actually, to have experienced it. And I think definitely mind-broadening.
Very interesting. So, therefore, it has to be said. I mean, you enjoyed the wonderful weathers of South Africa, also Australia, and you managed to survive the United Kingdom. That must have been a bit of a challenge, at least on the meteorological basis.
Yeah, well, 10 years in the UK, all high schooling, university, and then I had an opportunity to come back to South Africa, which I took, and I've been here ever since. Yeah, married, 2 kids. And happily settled, and yes, taken on the new challenge of A2X.
Fantastic. So tell me a little bit about your background then. How did you get into financial markets originally?
That's an interesting story, actually. I think I was always fascinated by finance, but to be fair, I kind of stumbled into it. I had an interview. I got an interview at the Johannesburg Stock Exchange in the supervisory department and inspectorate. And I remember going there, and I spent about an hour being interviewed. And I fear that perhaps my eyes might have glazed over a little bit, because he then at the end said, you know, I have a friend that worked for a stockbroker called Ferguson Brothers Hall and Stewart at the time, and they are desperately looking for people. Would you be interested? And I said, of course I'd be interested. Tell me more about the stockbroking business. My eyes obviously lit up. He literally took me upstairs to the 9th floor. I had an interview there and then, and the next day they hired me. And that was my entrance to financial markets. I started in the back office of a stockbroking firm. And that really, kind of kindled my interest. I then moved from there into the buy side. Actually, I was an analyst for 3-4 years, and part of my role was to deal the orders for the pension fund that we ran, and I loved that part of it. And actually, it kind of led to me talking to the brokers, and then one of the brokers eventually said to me, any interest in coming on this side? And I got offered a role on the Johannesburg Stock Exchange floor as a trader. And that was I must say, a very interesting, fascinating, incredible experience. I spent probably 4 or 5 years in all on the Johannesburg Stock Exchange floor. And then the Johannesburg Stock Exchange demutualized, it went online, and I was part of a broking firm. And yeah, I was basically stuck in trading, loved trading, landed up heading up the desk and becoming a director, got headhunted by Investec after about 8 years, and then moved across, and I was there for 13. So yeah, it was kind of like really more of a trading background, all types of trading, arbitrage, client trading, on the floor trading. So it kind of been my passion has been around trading. And then, yeah, I had, you mentioned my co-founders. Ashley Mendelovis headed up a technology firm. They provided us with our trading systems, fixed hubs, amongst other things. And look, I used to see him quite regularly, and he was definitely always pushing. He said, we need competition in this market. He had been to London, he'd seen what Chi-X had done, and he was always kind of very excited about it. And I kind of sat there and I looked around and I went, broking is becoming harder and harder. The margins are getting squeezed. There are a lot of brokers in South Africa. At that time, there was probably close on 70. We're down to about 40 now, actually. And the buy side's also quite, it's quite, there's a lot of competition, but there's only one exchange. And so I took the leap, and with Ashley and Sean, we made a call to try and bring competition to South Africa. And yeah, we are launched in we started the company end of 2014, went live in October 2017, and we're 5 years into our journey now.
Fascinating altogether. And actually, yes, it's quite intriguing, isn't it? I mean, just the way that the progress has been made across the the South African exchange environment. You touched there upon the floor, and certainly it's quite interesting to look at the journey. We're not here to talk about your competitor, the erstwhile monopolist, the JSE, but it's interesting to look at the macro of how, I mean, when Russell Loubser came in as CEO, they essentially couldn't settle in any coherent way and had to go out of their way in order to build a CSD that actually worked. And I suppose one of the things they did do, though, was they took a lot of competition out of the market because they acquired the bond exchange, they acquired the SAFEX, the futures and options exchange, and so on, and ended up as this huge monolith. So, I mean, it's going to be really exciting as well as a little bit daunting when you wake up in sort of 2014 and you and your two co-founders say, yeah, we're going to take on, I mean, something that looks, well, frankly, I mean, the JSE's position as a monolith makes, I don't know, any of those large dark stars in Star Wars look pretty minuscule.
Look, it's a very fair comment. And I think you start these journeys a little bit naively. You always think you'll kind of be more successful. I'm not sure you always necessarily understand all the challenges involved. And look, I think a lot of journeys would never start if you knew everything from day one. But yes, I think a very, very well entrenched, vertically integrated monopoly, and we can talk more about that later. And secondly, regulation remains very much on their side. So although we had the Financial Market Act that was promulgated in 2013 and opened the way for competition, it never actually envisaged an environment that had complexity in terms of cross listings and the need for interoperability and clearing and settlement. And that has been probably one of our big frustrations. And the interesting thing is, if you look back, you go, well, hang on, 2013, right? I mean, the MTF model was very much in play in Europe. Alternative trading systems in the US. It's amazing that it wasn't built into the regulation. And I think that is testament to actually the influence the likes of the JSE and at that time, I would have said straight, had on kind of influencing the regulation that was released.
Yes, it's very, very difficult. And certainly when you're looking at financial regulation, it's just as bad, if not worse, than, say, airlines, where for so many years you had this idea that you had a national carrier and that was the only possible person who could safely bring people in and out of the country. And you've got the same sort of problem arising. To be fair, at least, the good thing about most national monopoly stock exchanges is they still manage to make money, whereas national airlines always seem to manage to lose money in propitious quantities. But when you look at that, so you came in 2014, why did you actually want to start this beyond there's a need for competition here?
Look, I think there was definitely, as in my role as institutional stockbroking, I had a lot of engagement with the JSE. I mean, I sat on their trading advisory committee. I was part of the billing methodology. And I mean, I was very aware of industry frustrations around how do we grow this industry? It feels like it's being suffocated and there's a lot of self-interest. And I think that really fired up something in me that was like, we need to change this. We have a developed financial system, right? We have deep saving pools. We actually are world class, but we only have one exchange. I mean, the center of finance is a monopoly. And yeah, I was just like, we've got to change this, and it can be done. Look, it's as I say, it's been a harder road and a steeper hill, but I think, we're definitely past some key milestones, and I think, the road from here gets easier.
Well, that's a very interesting idea. The road from here gets easier. I'm talking to Kevin Brady. He's the CEO of A2X, A2X Market for All. Ladies and gentlemen, if you want to ask Kevin a question, ping us on any of the channels you can find us on right at this moment in time. Also, if you get an opportunity, help us to wage war on the AI bots and make sure that we are higher up the rankings. So therefore, a little bit of love would always be very much appreciated if you can hit that like button at the bottom of your screen. Kevin, you're talking about this, but still, I got to say, I'm sort of curious. I've got to pin you down. Did you recognize fundamental issues, for example, in listing, or were there fundamental issues for, say, smaller businesses that you really thought this is why A2X has to come to market?
So look, Interesting, right? I think there were two sides. I think from Ashley's perspective as a technology supplier, he also dealt with the JSE, very frustrated, felt that there was a lack of motivation and incentive to move forward and, to try and keep competition out. From my perspective, I just felt that, we have this market, and I went into a billing methodology committee and they said, okay, we need to discuss how the billing methodology should work. And their starting point was, well, we need to make 500 million. So that's the starting point. How are we going to shuffle this around? And I was like, that's just unbelievable. How can you take it? You're trying to grow an industry here. So I think we realized quite soon, I think the cost structure of the incumbent is high, and it is high on an international basis, probably top quartile. I've seen the frustration from international clients around understanding their billing, and it's the BDA. They have a post-trade system called BDA, which is very frustrating. So we looked at it and we felt it's inefficient, they're unresponsive, and we're not growing. And there's no doubt that I think one of the biggest motivators was this, being in the industry, knowing all the players in the broking industry, knowing many of the buy side, there was a real desire for competition. And, we thought that was the opportunity to play on that support and make it happen.
Cool. So when you went out to market, did you find it was relatively easy to get some of that buy and sell side to actually invest in your idea and support you?
So, that's a very, very good question that gets to the heart of some of the challenges. So we were fortunate in terms of, I think we got some good shareholders on side. So we had the founding three. Sean Malik had founded and was the non-exec chair of a very successful financial company called Peregrine. We had Ashley with really good technology experience. Again, founded and built the company, and myself with the stockbroking. We did feel there was enough expertise to at least make something happen. So we had the original funding. We then broadened it to include like an anchor tenant. So African Rainbow Capital came in and took quite a large strategic stake in us, and they've been a fantastic shareholder. So we've been fortunate in terms of finding the money. I think the challenge really has been turning support into action. It's easy to say we support. It's easy to say, oh, we want competition. To get people actually to change their daily behavior and infrastructure takes time. And that has probably been our hardest thing, turning support into actual physical action.
Yes, that's quite fascinating, because one of the two problems I see often with small exchanges growing is, first of all, lots of people say there's got to be competition, but when it comes to actually writing checks, they'll all say, well, when you build the exchange, I'll come along and add liquidity, bring you order flow, bring you listings, this, that, and the other. But they don't necessarily put their own money down very rapidly, or at least in significant amounts. And I think the other problem is that actually private capital is quite often reluctant to really turn around and commit. And certainly I see that worldwide, that people go, well, why do we need another stock exchange? And yet I can draw lots of diagrams which demonstrate the fact that actually the world's going towards more and more and more exchanges the world over, rather than fewer and fewer, which is what you get when you read what you would believe if you were reading the major financial newspapers. So, okay.
So that's your catch-22. Yeah, 100% right. So yes, we support you. When you get the 5%, we'll come on board. So, well, guys, how are we going to get the 5% without the support? So, look, we've been fortunate. I think we've had very strong relationships, and we've definitely had a handful of, actually some of the largest brokers say, we support this journey, we share your vision, and we will come on board, we will invest, and we will come on from an early stage. And that has been absolute key. You need to have your champions, and they championed us to where we are today. And if I look at where we are, of the two key champions, one's the largest broker in South Africa, one's the top 4 broker in South Africa. So we've been very fortunate to have them champion us from day one.
That's really, really terrific. And again, it is interesting to look at the way South Africa is made up, because I genuinely believe it's a unique country. And I don't just mean that because it's beautiful, there's Table Mountain, there's all sorts of incredible things. In capital market structure, it's very unique because it has always had a very sophisticated capital market and investor base. And as you say, no matter what the economy may have been, even in greater Africa, in the neighbors and so on, South Africa has always been really a fundamentally first world market, as opposed to, you know, a great deal of the other marketplaces in the region and on the continent, which, well, it would be generous to say that they were not in the first world. Let's put it that way.
Yeah. Look, you're right. I mean, that was, I guess, in some ways, the enigma is that we have, as you say, first world market, you know, saving pools. I mean, if you look at the ratio of what's market cap to GDP, I mean, South Africa's right up there. So it's definitely punched way above its weight. But as I say, frustratingly, they've never allowed for competition. And I think it's, you know, I think now more than ever, it just shows you how important it is to move this industry forward. Because without it, we would have just kept drifting further and further behind.
Well, that's very interesting. I mean, the whole competition thing. Let me just say, actually, at this point in time, good evening, Simon Huckle. Thank you very much for your message. It's lovely to hear from you. If you've got a question, please drop it in and ask it of our excellent guest, Kevin Brady, this evening. We're discussing A2X, a market for all, and it's based in South Africa. It's the first competitive market in South Africa against the monopolistic, well, actually monolithic, one might also say, JSE, the Johannesburg Stock Exchange Group, which controlled all things market until A2X came along just a few years ago. So yeah, you're looking at this market, you come in, and then did you pick a particular segment or a particular product area that you thought was going to be the ideal low-hanging fruit to get started?
So, you know, my background's equities, and we did a lot of work on actually Chi-X, and also Chi-X Australia before they, you know, they all became SIBO, to see how they did it. And I think it was a fairly clear model. You need to get into the secondary market and make a name for yourself and get, as I say, you need to be a successful challenger where the money is. So we then said, okay, well, let's look at the JSE. Where's their money coming from? Yes, they offer all asset classes, they're vertically integrated, but actually, if you take the pot that's around equities, if you take like primary listings, you take the secondary market, you take transaction fees, you take clearing, you take their post-trade system, BDA, you take data, where's the real money? And that's in equities. That makes up about 65% of their revenue. And so we said, that is the place that we need to get into and target. And when we get to a certain critical mass, we can then branch out and tackle other revenue areas. So that we definitely, that was we looked internationally, looked what they did, looked at some of the lessons. I mean, one of the interesting lessons from Australia, of course, was that, you know, Chi-X launched, but obviously the regulator said you need to use ASX CCP chess. And so, you know, we saw ASX respond by dropping their transaction fees and increasing their clearing fees. So we learned a lot of these lessons. We spoke to people in all the different jurisdictions. And so when we came in, we said, okay, we need to make sure, given our, you know, what we can do within our regulatory environment, that we are not dependent on the incumbent and that we tackle them and fight them at the key revenue streams in the equity area. And that's exactly what we're doing. So we, for instance, you know, it does bring other challenges, I must tell you, but, you know, we fight in the transaction fee space. We fight in the clearing space. We've offered a post-trade system as well to fight against the BDA space. So, you know, we don't want to be beholden upon them. But as I say, it brings other challenges. You know, if you've got two standalone exchanges with cross listings, you know, to find a solution to be able to get best execution where you trade across two markets and get one note is challenging. So, you know, I do think, again, I go back to a little bit naive. I think if you look at the South African market, the first thing that was against us really was regulation. I mean, as a starting point, we don't have the MTF model here, right? So as A2X, we have to go knock on the door of companies that have a listing on the JSE, where they've had a listing in some cases up to 100 years. convince them of the merits of having an additional listing on A2X, one at a time, and sign them up. And you mentioned we're up to 69 listings. Actually, I'm happy to say even since then we've added a few more. We should be at 88 by next week. But yes, that takes time and effort. You've got to knock on the door. You've got to convince people who've only ever known one market and who are effectively regulated by the JSE of the merits, get them listed. So that was one of our key challenges. The other key challenge is obviously this two exchange, one note problem, where you've got two different clearers, and how to resolve that. And we launched our own process end of last year, which was very successful. It did run into some objections and some complaints, but I think although there was a period of unnervousness, we came out the other side in an even better place where we had an agreement with the JSE where brokers can actually choose which venue they want to do their allocations on, and that enables them to do this, cross-exchange trading and issue one note.
Very interesting. And so when you've been dealing with the nexus, because as you say, the status quo was long established in South Africa. The Johannesburg Stock Exchange has a very long, venerable history going right back into the 19th century mining boom, long before anybody got terribly excited about, for example, South African wine or many other sectors of the economy. And it must be quite difficult when you're going in not just to the companies, but also to the regulators, as you've mentioned, but even to government and politicians, trying to get them to get their heads around the idea of why this additional stock market adds value.
So yes, you're right. We have these multiple pronged attacks. You're quite right. We work very closely with the regulator. We do a lot of lobbying and motivation around getting the South African regulation in line with best international practice. I think the job in terms of they acknowledge the benefits, they support the benefits, they are drafting the regulation, but frustratingly, it is incredibly slow. If you think of a regulator that issued the first competitor exchange license in 2017, we're now sitting in 2022, and not one piece of enabling regulation has been released. We don't have overarching best execution. We don't have, we call it conduct standards for exchanges, which is a bit like MiFID, or in Australia it would be, the integrity rules. So I think we are progressing. We are going to get there, but there's no doubt that we've got that one stream, lobbying the regulator to make the environment more enabling and easier. And the other side, of course, we are solutioning. How, in an environment where we could still wait for a couple of years, how do we resolve this problem? So we haven't just sit back and said, okay, wait for regulation to change. We have worked the companies to get them listed. We've worked the brokers. We've found solutions around the interoperability. And as I say, against some serious headwinds. And I think we couldn't have done that without our, as I say, champion brokers, our champion issuers, and the support of the buy side.
Absolutely. You need to have your supporters, you need to have your champions, you need to have as many people on side as you possibly can manage. And indeed, I must say, one of our champions, Peter Secon, he's just joined us, said good evening all from presumably somewhere in the sunny north of England. Well, I hope it's still sunny anyway. I hope Harry is very, very well. Peter, it is fabulous to see you this evening. Thanks for joining us. And here we are talking about A2X. We're talking about competitive marketplaces. A2X, a market for all, the first South African competitor exchange, which has now been running for 5 years, but was 8 years in the making. It is really fascinating, isn't it? Because gosh, 20 years ago, I was actually doing stuff behind the scenes with the Banking Council. And I remember going forward and we were talking to all of the different market counterparties and parties. We actually spent a few days in the beautiful surroundings of the Rand Club in downtown Johannesburg, where we were worried about things like clearing, settlement, the CSD, how that was all going to develop, how operable it was going to be, etc. And it's quite fascinating, how that ultimately managed to evolve. But what way does it work for you? You've mentioned the clearing side of the system, but the actual depository, you're therefore still having to go into the single monolithic CSD. Is that right?
That is correct. So yes, we do. We use Straight for our settlement. So, right. So how does it work? So it's an interesting question, right? So you're right. Straight is a monopoly, and it's owned 44% by the JSE. Just to add another challenge along the way, I think we're very fortunate in that Straight had an independent board and had independent views around where the market should go. And to be fair, Straight have been very supportive of developing competition in South Africa and happy to provide their services on a level playing field, in the sense that same pricing structures, etc. So yeah, I would say that Straight was, I think, quite visionary in the sense that they realized that if people are going to come monopoly bashing, they better get themselves in a position where they are working for all. And I think credit to them, they've done a very good job.
That's good to hear, because certainly, I think Straight were trying very, very hard to get the technology together even 2 decades ago, which was something that can't necessarily be said of all other CSDs throughout the world, for whom technology seems to have been a bit of a shock in the course of the last 10 or 12 years. So it is encouraging that that's working so well. So to go back to A2X, a market for all, when you first went out and marketed, did you know particular companies that were dissatisfied with the JSE and you targeted them, or did you go after the really big names with the maximum amount of liquidity, because that way you would get the most trading? What was your approach?
So our approach was to say, let's leverage relationships. What I found is getting in the door to do the pitch can be quite tricky, because there's a general perception, as soon as you mention exchange, that comes with costs and even more regulation, right? So they just put the shutters down. So we leveraged our relationships, both the ones we had with issuers, but importantly, actually, with our shareholder, African Rainbow Capital. It's the empowerment arm of Patrice Motsepe, one of Africa's most successful industrialists and entrepreneurs. And they had a lot of connections. And so they helped us get into a lot of doors of some big companies. And that kind of got the ball rolling. I think on day one, when we opened our doors for trade, we had 3 companies listed. We had Peregrine, and bearing in mind, one of our founders was the chairman, so we couldn't have convinced him. That would have been rough. The second one was African Rainbow Capital, which was our strategic investor. But importantly, actually, the third one is one of South Africa's leading asset managers, Coronation Asset Management. And that was an incredible message of endorsement, which helped us. And then we found later that year, we managed to get a couple, as I said, we got through the doors using our relationships. We got a couple of big companies on, and that starts making it easier. We then found that there was an inquisitive level of companies that were happy to listen to you. And so we found that the momentum then started building. Unfortunately, COVID did not help because obviously everyone's attention just went back to how do we work from home? What are our key issues? I would say that probably put us back about 18 months, 2 years in terms of our progress. But as soon as we kind of got through a certain point of COVID and people are looking up again and taking calls, we got the momentum going again. And I mean, if I look at this year, I think it's definitely been our most successful year yet in terms of listings. We are fortunate that we got some really big hitters on board early. The 2 big ones for South Africa are Naspers and Prosus. And that, I mean, that's where I would say, 20% of the trade takes place easily every day. So by having them gave us a big start. Then we've got, a lot of the banks, some of the miners, and we've actually got quite a good spread across the industry, although financial companies were generally the first to adopt, followed by the miners. Look, we still got a long way to go. If we look at the next week, let's say we've got 88, they represent about 43 to 45% of the universe in terms of trade across the market. So, we've broken the back of it, and as I say, we're finding it easier from here. But we would like regulation to change, because tomorrow we could say, thank you, you're all on.
Yes, and it would therefore be if you had the automatic process of, say, the European or the American ATS or MTF rules respectively, where essentially once you're listed somewhere, anybody can trade you wherever they like. That would certainly be a most exciting opportunity, wouldn't it? And therefore,
it would make a ginormous difference.
Yeah, and therefore, is it difficult to actually go through the paperwork that you are required for companies to do in order to list them?
So interestingly, we borrowed the concept of the secondary listing from the JSE. I mean, you can call it an inward listing, you can call it, they often refer to it as dual listing, but I mean, it's a secondary listing. And South Africa has a history whereby, if we look at the current 315 companies listed in the JSE, 69 of them are actually inward listings. So they have a primary listing on an offshore exchange. And so the inward listing on the JSE is, it's fairly light touch. So we looked at that concept, and basically we just did the same thing. We said, okay, primary listing on the JSE, or any listing on the JSE, an additional listing on A2X, the paperwork is minimal. So back to just, we ultimately want the MTF model here. So there's no cost to have a secondary listing on A2X. There's no risk to have a secondary listing on A2X, as obviously it all settles via straight. And thirdly, there's no additional regulation to have a listing. We don't require anything additional. There's only two things we ask for. One, you need to mention it in your annual report. So you can say, I have a secondary listing on A2X. And secondly, we ask the sponsor to send us a copy of any announcements that are going out on SENS. It's as really as simple as that. It's a 2-page document that says, I am in good standing with my host exchange, and this is where you can find the information and the key individuals. So we've made the process incredibly simple. So you would think, why not? And we often ask ourselves that question, why not? It just takes time. Every company you bang on the door goes through their own process. I mean, yes, they may check with their mates in some of the companies that are listed, but in all, they tend to go through their own process. They take it to board for approval. There's only 4 board meetings a year. You get a couple of tough questions, the board gets pushed back, and it's another 6 months. So it's a painfully slow process. As I say, I think we've done incredibly well under the circumstances to have a critical mass of listings. And yes, we are lobbying the regulator aggressively for the admit to trade model.
Very interesting altogether how you've managed to come back. And yes, as you mentioned, I mean, the whole inward listing model of JSE, because let's face it, traditionally anyway, a huge backbone of trading and transaction in South African markets has actually come from overseas, in addition to there being lots of miners that are listed in London or have been listed in Vancouver and in the days gone by, et cetera, and all around the world. And yes, it's a very, very interesting setup, just how could one say, cosmopolitan the listed markets have been in JSE. So you're at 88, you've got about 43 to 45% of the market. There's about 400 and something counters, I think you said, on JSE at the moment. What about primary markets? Have you actually brought companies to market for the first time that have not previously been dual listed?
So we've always said that at some stage offering primary listings is going to be important. Our view has always been build your brand in the secondary market, and it'll be a lot easier then to build your primary market. We still believe that. However, we still think it is probably 2 years away from where we are now. One, our regulatory environment doesn't allow for the transfer of listings, and you would think obviously your natural place to target would be companies listed in the JSE to transfer a listing. You can't transfer a listing. The company has to delist before they can relist. So that's a bit of an inhibitor. Alternatively, you've obviously got to go to the bottom end of the market, try and start getting some small and mid-cap listings. Now, what we have done actually, so there is another competitor in South Africa called the Cape Town Stock Exchange. Now, the Cape Town Stock Exchange is a standalone exchange, and it does very much target almost like that pre-LTEX level. So very, very much the smaller end of the scale, people looking for an alternative. And so we also worked with them, and we can now do secondary listings from the Cape Town Stock Exchange, and we work very well with them. So they're very good with the primary side. They're also very good in retail, where we are very good in the wholesale market. And we found it's a natural working relationship in terms of working for both parties. So when they pitch, they can say, look, you can primary list on us and you can secondary list on the A2X. We already have 2 companies that have done that. And so for the very first time in South Africa, you actually have a new route to market that will give you access to everything, a primary listing, a retail base, and a wholesale secondary market. And we think, although these things take time to get the critical mass, we feel that the seeds have been sown, and this opens up a very nice longer term strategy for us.
Very interesting altogether. And just remind me of something, because I must admit my brain has gone a bit foggy as we've been talking about all these things. What happened to 4AX? That was also a competitor exchange in the South African environment, wasn't it?
So actually 4AX got a new management team and new shareholders and rebranded themselves as Cape Town Stock Exchange. So they are the old 4AX. There was another competitor called Zarex. However, about a year ago, their license was suspended for insufficient reg cap. So, yeah, I mean, effectively, you've got the three in the market. And as I say, I think it sends a good message that, Cape Town Stock Exchange and ourselves offer a complementary service and a different route to market.
I think it's very interesting altogether, and I'm also delighted that 4AX rebranded, because I must admit A2X, 4AX, it started to sound to me like very, very poorly written machine code from about 30 years ago. It was always very confusing in the branding point, whereas the Cape Town Stock Exchange, I can get that. It's easy enough for me to manage to discern, even if I'm attempting a bit of male multitasking and trying to think while I talk. So yes, quite interesting. Now Zarex, yes, that was a shame. I mean, they disappeared because of their lack of capital. As a matter of interest, are the regulatory capital rules particularly tricky to manage to meet in South Africa?
So reg cap rules are quite simple. You need to hold 6 months of operating costs in regulatory capital. So, I mean, I can understand Zarex's concern. Zarex was really a pre-authorized model. So their argument was, well, we don't need any reg capital. But I think that the bigger problem is a standalone exchange is an incredibly difficult way to build a business. To list one company at a time is like a 20-year time horizon.
Yeah.
And you need deep pockets and very supportive and understanding shareholders. And so, when we looked at the various models, we just said, you've got to start in the secondary market where the big bucks are. Then you can branch out from there. I mean, to give you a sense, I think I said 65% of the JSE revenue ultimately comes from equity. It's about 1.6, 1.7 billion in revenue. About 160 and 70 of that comes from primary listings. So you can see that it's not the money spinner. It's the gateway that's very important, but it's not the money spinner. The money spinner is the secondary market.
Yes. Yes, it's interesting that actually, because traditionally, I mean, a lot of the futures options exchanges way back when, they always looked at the capital market structure of stock exchanges and thought, gosh, aren't they lucky? They get all these listing fees in, which really pay so many of the bills. But really, that's been turned on its it's totally upended over the course of years. Fabulous comment actually has just come in here from a previous alumni of IPO-VID. It is Martin Watkins saying Patrick Young and Kevin Brady, another fascinating IPO-VID and a great refresh of primary and secondary listings on JSE and A2X. Reminds me of the very successful listing in South Africa by the First Lady to appear on IPO-VID. Best regards, Martin Watkins. Thank you so much, Martin. Fabulous to see you last week in London. And yes, indeed, we had the joy of, I do believe it was both our first South African guest and also our first female guest on the show, which was Sharon Constantian, who was talking about her IPO on the JSE many moons ago, long before there was the opportunity to manage to also list or secondarily list alongside A2X. Thank you very much for that. Much appreciated. And we have, I do believe, a question coming in fast and thick. Thank you so much for sending these questions through, ladies and gentlemen. Peter Secon. Peter is asking, in today's unprecedented climate of volatility, how are the big exchanges? There you go. You've made it, Kevin. The big exchanges, including yourself, battling it out to differentiate themselves in the current competitive marketplace?
So, well, thank you for that. We're not a big exchange yet, but we, as I say, we've got about 5 trillion rand in combined market cap. We've got 5 of the 6 biggest brokers in South Africa. We've got about a 3 to 4% market share of our universe of stocks in continuous trade. So going well. How do we differentiate ourselves? We really do it. The first basis is on cost. So obviously by using, we actually licensed the A2X technology, and by using the latest technology and business practices, we can bring down the cost of running the business tremendously. And a lot of those efficiency gains are passed on. So on an average trade where you get charged that transaction fee, a clearing fee, a BDA fee, a live data fee, we are around about 50% cheaper than the JSE. So there are quite big savings for brokers, first of all, there. Secondly, and I think very much in line with the international experience, when you reduce friction costs and you create a pricing model that looks to attract liquidity, you do attract more liquidity. And so what we found is that at the national best bid and offer, we attract sizable liquidity. In fact, if we look at on average on our index stocks, it's probably 5 to 7 times the size of that of JSE at the national best bid and offer. And on our mid-cap stocks, probably 4 to 5 times. So more liquidity. And on top of that, they pass on some of the gains in the price. So what we find is that the spreads are narrowing. So lower costs, better quality market. And thirdly, client service. Treat brokers like their clients. They appreciate it. So, and then bring innovation are probably the 4 things we're doing. One of the nice things about using the A2X tech stack is that obviously it's European based. So it's most of the order types you use in Europe are available in the system. So from a South African perspective, we can look at those and we can say, this could really work quite nicely in South Africa, get regulatory approval for it, and then we can roll it out. So yeah, I think, we can look to unlock liquidity by, innovative order types that are being used in Europe. And I mean, here's an interesting stat for you, right? So we reckon, we've done the numbers, we reckon if all shares that were listed in the JSE were listed on A2X, and 100% of continuous trade took place on A2X, first of all, there's about 500 million rand in savings just in fee differential. And then secondly, if you could buy and sell something 1 cent better every time you transacted, you would save another billion. And so, we're not naive. We don't think we're going to have 100%, but that 1.5 billion rand of available savings, both for the broking industry and for the end client, 500 and a billion. So it's a fairly attractive proposition. And as I say, in a high cost environment, there's definitely a lot of support for that.
That's a really fascinating set of numbers because, I mean, you save, as you say, you save 500 million rand here and 500 million rand there. Sooner or later, you're talking about real money in order to manage to get back to the old cliche. But actually, the thing that's very interesting about that is you save 500 million rand. That's 500 million rand that investors can keep rolling up. And therefore, when you get that over 15, 20, 30, 40 years in your pension, starts to make actually quite a serious add-on to the returns of all investments over time because the friction is so much less. And that's what makes it really, really exciting to see. And certainly does show just how advantageous it can be. And I mean, you mentioned A2X technology. Obviously, Alistair Haynes, also an alumni of this show. I think he was guest in episode, if I remember correctly, number 10. Of course, at this point in time, after 78 shows, sometimes I can get the odd number slightly wrong here on the national best bid and offer of different shows according to where they've been. Very, very interesting. How did you come? I mean, you mentioned at the very start of the show, you'd been talking to A2X a long time earlier. Was that kind of how you came around to the A2X technology, or was it another route?
So actually, funny enough, we had a relationship. When I say we, some of the founding investors and my co-partners actually had a small stake in A2X, and that's really where part of the idea formed and where the relationship formed. I mean, before we chose a supplier, we did a proper due diligence across many suppliers, but I mean, A2X actually stood out head and shoulders. And, I can actually say they've been a wonderful technology partner in our journey. And I think, the likes of Alistair and Jonathan, Graham, and the rest of the team, they have this incredible experience and knowledge around what's happened in Europe. And they're always available for us to tap into it. So we're very fortunate not just to get the technology, but we get a lot of expert insight and advice. And that definitely helped us along the way.
That's very interesting. I agree. I mean, I completely echo the incredible experience that we've seen along the line from Alistair, which he was showing us, of course, in that show number 10. one thing that just comes to mind is you've talked so far about everything that you're doing, or maybe I've missed something. Everything you're doing is all about lit markets, ultra liquidity, and so on. Have you looked at the block market?
So look, you're right. So our focus has been lit market, additional liquidity, narrow spreads. We have actually released recently 2 off-book trade types. So European terms would be large in scale and negotiated benchmark cross. They had to be customized for the South African market in terms of the fields. And actually that rolls out in October. And I think we're going to see some nice take up of that. The other 2 that we have in the to-do list, whether it's this year or early next year, we're looking at the auction on demand, which we think would be a wonderful trade type for the South African market. There's no doubt when I run around and see the buy side, their natural complaint is, I'm on the market, I can get picked off. So at the moment it feels like a big fishbowl in South Africa with one predominant market. How do we source liquidity elsewhere? And so I think the auction on demand will be very well received. And then also we've been engaging with them around the market at close. I mean, I guess for all challenger exchanges, that's a tough place to break into, closing auctions and make up a considerable amount of the overall activity. I think, in South Africa, it's 22% in the closing auction. So if you can break into that space and capture parts of that pie, again, it helps you grow quite nicely. So we have some nice block stuff that we are rolled out or in the process of looking to roll out in the next 3 to 6 months.
Very interesting. I mean, you've got a lot underway as you're going along. If you don't mind me asking, roughly what sort of size of organization have you in terms of headcount?
Sure. We are 12 people. So, I think that's what makes it exciting. When we went and sat in the Aquis office and you said, okay, which is technology, which is exchange, or when one of my, as I say, Ashley was in the A2X office when they first launched, I think there were like 18 or 19 people, I'm not sure. There's no doubt in the modern world with the use of technology, you don't need hundreds and hundreds of people. So we have we have an incredible mix of experience. We're fortunate putting the team together. Great technology, and I mean, I'll throw out a stat for you, but we look at it and we reckon we can run an exchange at less than what it costs the JSE to rent their building.
Yeah, I can echo that. I used to run an exchange. I used to run an exchange in Transylvania, Cybex, and famously we had a stock exchange, a futures and options exchange that also did warrants. We had a CSD and a form of central counterparty clearinghouse, and our entire budget was actually less than the Deutsche Börse spent on their annual general meeting and freebies for conferences around the world. So I think it's a kind of similar equivalent number, but actually that's a stunning headcount number. And I really applaud you for that, because I mean, South Africa has had some incredible exchanges that had very, very modest numbers of staff. I mean, the bond exchange, I think, was barely about 20 people, if I remember correctly. The SAFEX was running around about 35 or 36 when it was running really quite a cracking futures exchange and clearinghouse as a separate entity. 12 people. I mean, that's quite incredible. How do you manage to get that quite so low? Presumably your technology is outsourced and therefore you've really only got sort of systems administration or something.
So, yeah, you're right. I mean, obviously we licensed the Aquis technology. It's hosted in an independent data center called Terrico, actually by the airport. And so really, if you think about what are our focus, post-trade. So we've got a 3-man post-trade team that makes sure that all works smoothly. We've done a joint venture with a local tech company to help build our post-trade system. We call it MICRAS. So, we've done deals to do that. So they obviously do a lot of the work. We bring the IP. We've got 3 people in, compliance and reg. And we've got 3 people in tech. And then, you've got business development. You've got a CFO. Look, I would say that, we 3 to 4%, if we jump to 15, 20%, we probably will need to add a few more heads. And obviously, if we move into different markets, different asset classes, or if we move into primaries, we will need a bit more of a head count. But I think, we've really concentrated on keeping it tight. There's always a danger with key man risk, but we've been fortunate. I think, we've got an incredible team of the right experience. I mean, probably some of the best experience in the country. You got to remember, right, with one exchange, the pickings in terms of where you go to find people is not a huge number of them, right? So, we've been very fortunate to kind of literally handpick a couple of really good people. And on top of that, to have a culture fit and to have people buy into this dream, right? Because it is a dream initially when you start, that, that we're going to make change. We're going to change the financial landscape in South Africa, and to buy into that and believe that they can be part of that journey and to challenge the status quo and to come up with innovation. And I think we've been very fortunate. And on top of that, you need good shareholders, supportive, deep pockets, understanding shareholders.
Fabulous. Really, really superb synopsis of A2X, a market for all. So tell me, Kevin, where do you think the capital market revolution goes next?
Good question. Tough question. So look, I think I'm going to look at it through a South African lens. And I think it's probably more of an evolution than a revolution. But I think the challenge we've had in South Africa is actually we've largely had a shrinking market. Yes, market cap is up, but if you look at trade activity, they've generally been fairly constant, maybe tapering off. We've had delistings. So I think what we're going to see in South Africa, and I think it's really going to be driven by competition and a response from the incumbent and possibly new competition, is that there's probably the first thing there's going to be an ongoing great push to get South African regulation in line with international best standards. Let's level the playing field. Secondly, from a South African perspective, when I say it's shrinking, part of the challenge we have as Reg 28 is that they allow more money to go offshore. So pension funds can invest 45% of the total assets offshore. And what we're finding in South Africa is that goes offshore and you never see it again. And so I think the next shift in South Africa is to say we need to do something about that, right? We can't just let it go offshore. We need to make sure we're fighting back. So I think there's going to be a lot of focus and action on how do we bring international exposure or listings or to South Africa, and how do we regrow the industry, create expertise in South Africa for global asset management, as opposed to shifting it offshore the whole time. More liquidity, deeper markets. So I think we're going to see that whole context developing a bit of momentum. And I think possibly the last thing is you could start to see, maybe not pan-African, but maybe pan-Sub-Saharan. You might see people looking across the Sub-Saharan area and saying, look, yes, there are a lot of exchanges. How do we start pulling this together and making it more attractive, more unique? So if you said to me, I think regulation, start turning around this industry from being a shrinking industry to a growing industry. And three, possibly you could see some move into Africa to create a bit more of uniqueness.
So the path everybody wants to take is Pan-African Sub-Saharan equities. The opportunity is to turn your magnificent dozen staff into several more, but nonetheless, you've achieved 88 listings. Well, you will have done in the course of a week or so, which is going to be something like 43 to 45% of the total market. You're talking about saving $1 billion, if not 2 billion rand a year in the relatively near future. You're certainly at 500 million to $1 billion. New podcast, ladies and gentlemen, episode 66 with Keith Todd, delivering SaaS through IT. Next week, we've got a magnificent show coming up. We're going to have as our guest Paul Kahn, who is going to be our next opportunity to talk about the clearing and settlement business around the world. That's Paul Kahn of Computershare. It only remains for me to say thank you very, very much to all of our guests this evening who were talking to us, which was, I do believe, Simon Huckle, Peter Secon, Martin Watkins. Sorry we didn't manage to get back to your question, Martin. That was an excellent question altogether. Hopefully we'll manage to get another chance to talk to Kevin in the near future and look at the whole idea of digital securities and how those may impact on the South African market. Kevin, Brady, it's been absolutely a joy. This has been IPO-VID number 78, talking about A2X, a market for all. My name is Patrick L. Young. See you back here at same time, same place next week. Thank you very much for watching. Have a great week in life, blockchain, and markets.